Micron technology has put investors on a roller coaster ride in 2024. I'll share with you exactly what I mean by that in just a little bit. But investors that are looking at this investment and trying to understand and trying to answer if they should buy it for 2025, I'm going to give you a lot of details to help you make that decision in this video. I'll give you my opinion on whether or not I think it's a buy, hold, or a sell. But I'll also share with you all of the research that went into that decision so you can decide for yourself. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so here's what I meant when I said that Micron technology has put investors on a roller coaster ride in 2024. To start the year, it rose and rose and rose. It was up almost 75% year to date in 2024 before July, and things were looking great. And then down it went like a roller coaster ride on a big drop. And now it's down a tenth of a percent as of this recording on December 30th, with one trading day left in the year. So up and down they went, and at the end of the year, relatively roughly flat for Micron technology stock investors. Now, the company's revenue looked great in 2024. Trailing 12-month revenue bounced back to $29 billion following the cyclical low in 2023. Management has forecast continued growth in the upcoming year. However, management was a little more aggressive in their capital expenditures than investors would like. Micron, like Intel, is investing billions of dollars in expanding manufacturing. Investors didn't like that. But Micron is doing it because the prospects for its products look great. Demand for its next generation HBM high bandwidth memory technology is through the roof, and its newest technology is sold out. And so the company likes its prospects and it's investing ahead. Also, the company's getting subsidies from the US government, billions of dollars to help the spending on manufacturing expansion. So if you're ever going to expand, this is a great time to do so. You've got the billions of dollars in government benefits. You've got growth in the semiconductor industry led by improvements in artificial intelligence, and demand is absolutely soaring. So it's a great time to invest in manufacturing expansion. Unfortunately, from an investor perspective, investors do not like that. Whenever investors see increases in capital expenditures at the rate that Micron is doing, I mean, over 30-40% of their revenue, they're spending on capital expenditures. That's a very large amount. Typically, companies don't do more than 10% of their revenue on capital expenditure. Micron is all the way up to 30% in CapEx. So all of that investment in capital expenditure really weighed on the company's free cash flow in 2024. They only generated $120 million in free cash flow in 2024. The forecast from Wall Street is that in its fiscal year 2025, which will end on August 31st, 2025, that the company will generate about $3.3 billion in free cash flow. Now, that's expected to increase in 2026 to $6.8 billion, before declining again in 2027 to $5 billion, and then rising again in 2028 and 2029. The company's new manufacturing facilities in Idaho and New York, I believe, if I'm remembering the states correctly, where they are expanding their manufacturing facilities, those are not expected to come online until 2027, 2028. So that's when those will be up and running and producing, generating cash flow for the company, because up until that point, the company's putting cash out, putting cash out, putting cash out. And then in those years, they'll start to recover those cash flows, and hopefully more than they've put in. Now, the cash flow from operations has turned upward, $10.35 billion in the most recent trailing 12-month period. And I wouldn't be surprised if the peak in this cycle surpasses the previous cycle peak in 2019, because this cycle, these components that are going into data centers and devices, edge devices like smartphones and laptops and personal computers, they require more components. So more chips, more memory, more storage is required to operate the enhancements for artificial intelligence. And in this cycle, Micron is going to generate more revenue and profit from data centers that are optimized for artificial intelligence. Micron's memory chips, the HBM memory chips, are a key component in these data centers optimized for artificial intelligence. Micron, in its most recent quarterly earnings report, said that now, for the first time in the company's history, more than 50% of its revenue is coming from the data center segment. Whereas previously that was a smaller component of its business. Now it's grown to more than half of the business, and that segment is growing rapidly. Whereas the consumer side of the business is the side that's struggling. Smartphone unit sales are not growing all that much, low single digits, if anything. Same with personal computer sales, not growing by all that much. We're awaiting that replacement cycle that could facilitate growth in that category, but that remains to be seen. Whereas the data center segment, it's already surging and expected to continue surging for the next 3 to 5 years at the very least. So the balance sheet is in relatively good shape. The company has $11 billion in long-term debt and about $7 billion in cash. And as you saw, it generated over $10 billion in cash from operations. So in about a year, it can pay off all of its long-term debt if it wanted to do so. But most of the time, companies the size of Micron, they like to hold some debt because the cost of debt is lower than the cost of equity. So they like to finance the business with at least some percentage of debt compared to financing with all equity. So all that being said, those pressures that I highlighted in the beginning of the video, they have Micron stock selling at the cheapest valuation it's been at in a very long time. It's trading at a forward price to earning of just 7.4, which to me is relatively undervalued for this business. Now, that's just one way to look at it. Another way I look at valuation is through a discounted cash flow valuation model. For Micron, I did this discounted cash flow valuation model on December 9th, and I updated it today before this recording, and it still holds true. The company's intrinsic value per share, according to my calculation, should be $138, but it's trading at $85 per share. So to me, it looks like undervalued, whether I look at it on a discounted cash flow valuation basis or whether I look at it on a multiples basis with the forward price to earnings ratio. So heading into 2025, is Micron stock a buy? The answer is, in my opinion, yes. I think the stock is a buy for 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.